Welcome back. You're watching Trade of the Week. Today, we take a quantitative mental analysis on Stor-Age, Raubex, Hyprop and Netcare with Loyiso Mpeta from Unum Capital. Thank you so much for your time, Loyiso. Quite an interesting mix that we have over there with some of the property counters, but obviously not in the same space, and then construction and then healthcare. Let's start off with Hyprop, quite an interesting one. A lot of us have been to their malls here in South Africa and some in Eastern Europe, those who have gotten the privilege of going there, and Sub-Saharan Africa, which they don't own now. But anyway, just starting off with the technical analysis of Hyprop. What picture are you seeing there?
Well, just to put everything in context, I think it's best we take a long-term view of what has transpired in terms of Hyprop's share performance. So going back to 2003, we can see the stock had a very, very strong bull market, which peaked in 2016. Now, from a wave perspective, I can see that this unfolded in a textbook 5-wave advance. But what we've seen from 2016 to April 2020 was a massive sell-off where the stock lost 90% of its value. Now, this was due to a myriad of reasons, vacancy issues, interest rate changes. I think that just the whole real estate investment trust market, the whole property market really was under massive pressure. So the question now is, from this April 2020, we can see that the stock is starting to recover a bit. And the question is a low in place at 1447, which was the low back in April 2020. So if we take a closer look now, looking at it from a weekly perspective, now I'm looking for Elliott wave patterns here, and I'm asking myself, can we be bold and say a bottom is in? So looking at the advance from this April 2020 bottom, the first advance appears to me to be in 5 waves, which is for which represents a leading diagonal for a higher degree wave 1. And we had this bit of a shallowish correction, which bottomed at 25.24 last year in October. So I'm tentatively labeling this as wave 2. Now, if this is wave 1, wave 2, then the question is, are we now in the early stages of a third wave, which could be a very powerful third wave? So the best count I have currently is for a wave 1, wave 2 of lower degree. And currently the stock is in the early stages of a much larger wave 3. But for this wave count to remain intact, the key level to watch is 27 Rand 11 cents. And if the market were to retrace back below 27.11, then the next key level would be 25.24. But still, even if we were to see a retracement back below 25.24, then the primary invalidation remains 14 Rand 47. So if you do like the technical picture and you believe that fundamentals are improving and you are looking at buying Hyprop, I would at least recommend a stop loss below 25.24, and hopefully then we will start to see more upside if the fundamentals do become supportive. And I think also from...
What are they looking like at the moment?
Yeah, it's quite a bit of a mixed bag because of, there's a couple of moving parts.
Yes.
We saw some strong performance from the European portfolio.
Yes, and it seems that's always the trend with these diversified property players where they're doing really well in Europe. Yeah,
so Europe has been very, very good. The fundamentals have been very supportive. South Africa is quite interesting because there seems to be a dynamic risk which has been posed by what's happening within Pick n Pay, and Pick n Pay actually being their primary tenant. I think when it comes to their gross leasable area, Pick n Pay accounts for about 7.6, if I'm correct, which is the largest.
Yes.
So now they're trying to sort of replace Pick n Pay with Checkers, and also increasing
diversify and kind of be more defensive.
Yeah, exactly. So those dynamics are still sort of in the early stages, but I think the management will probably have a very good solution for that risk which is being posed by Pick and Pay. Like you said, the last results were severely hampered by the sub-Saharan portfolio. So those three moving parts, it just depends on how management really manage those dynamic risks. But from a technical perspective, I think there is some hope. And also, I think if we start seeing cuts in our interest rates, that has also been something that has hampered Hyprop severely, being in a higher for longer interest rate environment. It's just a question of whether our Reserve Bank will first wait for the US to start cutting and then following suit, or but that also weighs heavily on the performance of Hyprop.
All right, well, at least there is a pricing in of cuts this year. How far and how fast they go will, of course, depend. Let's go into healthcare. Netcare, of course, quite a very interesting point of focus in South Africa, particularly after we had the signing of the NHI into law earlier on this year. Netcare also saying that government missed an opportunity there to listen to the private sector in terms of how they introduced that to the market. But just looking at Netcare at this point, what does it look like? Because, of course, it participated in the pressure that we saw after the signing of that NHI.
Yeah. So this one is a bit of a early stage, tentative, potential reversal.
Okay.
We can say again, back in March 2015, made an all-time high, a very strong sell-off to 11.30 in December of 2020. And what we've seen since 2020 has been a small bounce and a very choppy, lethargic sell-off, which has found a bottom recently in May at 11 Rand 1 cent. Now, from a technical perspective, what I am looking at here, though very, very early, is a potential double bottom reversal, as we can see here, which is a bullish reversal pattern after a prolonged downtrend, which we have in Netcare. So zooming into this potential double bottom, what I am looking at is this key trend line, and we see price looks to almost be breaking out of this resistance trend line. And also from a trend perspective, we can see that this right leg of the double bottom has been characterized by this sequence of lower lows as well as lower highs. But what we had recently from a bounce from 11 Rand 1 cent has been this strong sell-off, but it held above the previous lower low, giving us now a higher low, and we see price starting to push out of this resistance trend line. So ideally, I would like to see price push further up and breaking this previous lower high, which is at around 14 Rand 80. So technically, it's still very, very early stages to call a turnaround, but from a technical pattern perspective, this double bottom does look promising, though again we always say the fundamental picture is not really that supportive. I think in the latest
a little bit shaky.
Yeah, it is still very shaky. I think in the latest results, management revised down their revenue growth and profit growth for the rest of the year. I think from about 7.5% to 5%. And also, when you look at Netcare in terms of their occupancies, they are still below pre-pandemic levels. And I think they forecasting that they will get back to those pre-pandemic levels only in 2026. So that shows how much pressure the fundamentals are of the business. And also now, you mentioned the NHI bill, also just looking at the South African consumer as well, heavily under constraint. So there's also been limited growth in terms of their privately, medically insured members as well. So the fundamental picture is still very, very gloomy. So I wouldn't be overly bullish based on this technical pattern I'm seeing, but it's certainly one to keep an eye on.
Maybe you can just expect some growth, but not growth that is particularly massive. Let's go on to Raubex, of course, seen as one of the best construction counters on the JSE. What are you seeing there?
Well, I'm giggling there because when it comes to those counters on the JSE, it's one of those fallen angel sectors, really. When you look at the Marian Roberts and co of the sector. So, yeah, very interesting one, Raubex. This is more of a caution more than seeing potential for more upside. So for a very, very long period, Raubex basically did nothing, really just trading sideways.
Yeah.
And then we started seeing a strong rally from March 2020 with a very, very sharp pullback. Very volatile stock, but once it starts going, it does go. So the question is, currently, is it still a good buy? And I'm a bit concerned whenever I see a stock accelerating towards a previous all-time high, especially one that was set way back in 2008. And looking at it from a daily perspective, not much in terms of an Elliott wave count, but using moving averages as a filter, we can see that the 50 EMA does provide some support together with the 100 EMA. So we had this bit of a correction here which found support at the 100 EMA and starts to push up. So if you're not already in the stock, I think it's a bit late to start chasing it now. The momentum is already too much into the stock. So I think that for me is the caution, is don't chase it. If you've missed it,
maybe the easy money's been made.
The easy money has been made. And it's quite interesting that you refer to it as a
construction counter,
because they've actually made quite an interesting investment in a chrome mine operation as well, which is Boba Chrome Mines. And I think in the short term, that has been primarily been the main driver in terms of the stock return, because if you look at the stainless steel industry, and China has come back into that market strongly, and chrome plays a significant role in the manufacture of that stainless steel. So that benefited the Boba investment part of Raubex. But
so that pivot paying off.
Yeah, definitely paying off. But there is a bit of, similar to what you have with platinum and palladium, there is a substitution change happening as well when it comes to chrome versus nickel. And actually, I think over the last 6 months or so, chrome has become 260% more expensive
than
nickel. So there's that substitution risk now, which is coming in as well, which investors would have to factor in. So hence again, I'm saying, if you're not already in the stock, probably a bit late to try and chase it now.
All right. Well, what about Stor-Age? Another interesting one in that REIT space. I think the only storage counter on the JSE there in that REIT space, or only pure storage play. What can you deduce from the chart?
Yeah, so again here, a good start from 2016, not a blow the lights out rally, which peaked in November 2019. And unlike what we saw with Hyprop, Stor-Age has actually been more defensive, moving relatively sideways between 2019 and to date. So about 5 years of pretty much stagnant performance. And from a technical perspective, what I'm seeing is an Elliott wave triangle characterized by 5 waves, wave A to wave E. And what triangles typically signify is it's a period where there's no growth, but at the same time, there's no deterioration. So it's almost like a balanced market where the market is still trying to figure out which way to go. And we can see now this triangle is starting to contract. And from a bias, it's very difficult to either be bullish or bearish. So it's a neutral pattern.
Okay.
So again, from Stor-Age, from a volumes perspective, I haven't seen much growth, but what has enabled them to be quite resilient during this period is the pricing power that they have. And they also have this very interesting data-driven platform which enables them to provide dynamic pricing. So I think that has
which is quite interesting because there are quite a few players in that storage sector, and especially the ones that aren't listed.
Yeah. So that has enabled them to be resilient, but there hasn't been anything really to write home about in terms of what's going to drive the next stage of growth. Are we going to see a breakout of this triangle to the upside? What's going to drive that? But there doesn't seem also to be anything that is of concern that could see a sell-off. I think one of the catalysts, again, that will bode well for Stor-Age is if we do start to see interest rates being cut, because they're also very sensitive to the high interest rate environment. So that's the one thing that I believe could also be a catalyst to Stor-Age. But as it is today, I'm still on the fence, but I'm more geared towards bullish than bearish.
Yeah. And would you say that this part of the REIT sector is maybe the most resilient and most defensive part?
I would say so, because of the simplicity of the business.
Yeah.
I think that is the main advantage of the storage business, just the simplicity of it. It's
and maybe being capital light, than the other.
Not too diversified, you know, and just like you say, the simplicity of it, low cost to operate, and just those efficiencies with and also the pricing power as well.
Yeah, and it's also been interesting to see the JVs that they've gone into, I guess also, you know, feeding into that story of being capital light, that they're willing to partner with other businesses. Thank you so much, Loyiso, for your insights and your quantum mental analysis today. That was Unum Capital's Loyiso Mpeta.